In the Forex market, currency pegs are among the most important structural elements influencing price stability and trading strategies. One notable example is the UAE dirham, which is pegged to the US dollar. For traders on platforms like PrimeNexusGate, understanding this peg can influence risk management and strategy. A currency peg is a policy where a central bank maintains a fixed exchange rate between its currency and another major currency. In the UAE, the dirham is pegged to the US dollar at approximately 3.6725 AED per USD. This means the UAE central bank actively intervenes in currency markets when necessary to maintain the ratio. The peg provides predictability in international trade and reduced currency volatility. It also promotes stronger investor confidence and easier cross-border financial transactions. For traders, this stability creates both opportunities and limitations. Unlike freely floating currencies, a pegged currency moves within a controlled range. Large fluctuations are rare because central banks intervene to preserve the peg. For PrimeNexusGate users, this means lower volatility in USD-AED pairs and more predictable price behavior. It also means reduced speculative opportunities compared to floating currencies. Still, pegged currencies play an important role in global macro strategies as stability anchors. Because pegged currencies rarely swing widely, strategies often focus on macroeconomic correlations. The AED moves indirectly with the US dollar, so US interest rates and Federal Reserve policy matter. Traders monitor Fed decisions, US inflation data, and global oil market dynamics. Since the UAE economy is tied to energy exports, oil prices can influence liquidity flows into the region. Stable currencies can be useful in carry trade strategies, where traders borrow in low-rate currencies and invest in higher-yield assets. Even if AED may not offer major yield advantages, the peg reduces certain forms of currency risk. Pegged currencies also serve as risk-balancing tools in diversified portfolios. Traders might hold volatile pairs like EUR-USD or GBP-USD while using stable environments to balance volatility. Although pegs provide stability, they are not immune to pressure from declining reserves or capital outflows. Historically, pegs can come under stress when macroeconomic conditions change dramatically. The UAE maintains strong reserves and disciplined policy, which reinforces confidence in the peg. For PrimeNexusGate users, these structural strengths are important to consider when analyzing USD-AED. Modern trading platforms must provide macro insights, charting tools, and risk monitoring systems. PrimeNexusGate integrates real-time market data, advanced charting, macro event tracking, and portfolio risk analysis. These features help traders understand price movements and the broader forces driving currency stability. In a global Forex environment defined by rapid macro shifts, pegged currencies represent a unique category. They remind traders that not every market move is driven by speculation, but often by policy discipline. Understanding the mechanics of the USD-AED peg allows traders to build strategies that balance opportunity with stability. The USD peg remains one of the strongest pillars of currency stability in the Middle East. For Forex traders using PrimeNexusGate, it offers a framework for understanding regional liquidity flows and macro alignment with the US dollar. While pegged currencies may not deliver dramatic short-term price swings, they play a crucial role in portfolio structure and risk management.